All right, hope everyone's doing well. I got some noise in the background. Can't really help it, so I hope it's not too much of a distraction. If it is, let me know, and I'll prevent that going forward. This is going to be a 15-minute video. That's all the time I have right now. So I want to continue with we left off on the prior video with Monday. I believe we left off with just Monday, and we had wedge top. Basically, the whole premise of this day is when you get a sell-off this big compared to the left, and you look to the left, and you're still, you're not. Let me say this: when you get a big sell-off, the bigger the sell-off on the open, and then the bigger the initial move after you get a reversal. So in other words, let's pretend this was the start of, let me just kind of, here's a good example. So here's a wedge top, and this wedge isn't too big. If it was twice as big up to here, the odds of this would be a lot lower. But since this is fairly small, it's fairly easy to get a measured move down. Now, this was a little different because these bars are so big, you're probably going to get some sort of measured move down, at least of the initial range. I don't really consider that the start of the breakout. You can, but these bars are just so much bigger and so much more impressive that I really think most traders will look from the open to close, and no surprise, there's the low. Fun fact for you, a lot of times when you get a big move like this and you get the initial measure move down and it looks rather weak, a lot of traders, I do believe this, will let's say here's the target, they will buy in this general area, and they'll use a wide catastrophic stop. They'll use a wide stop, 2,800, somewhere down here. And they're going to buy betting that we're going to get back to this close. And this is probably more of kind of like an options trade. But a lot of traders will do that. And you can see, really a lot of traders just bought with limit orders at this support area for a couple reasons. Consecutive sell climaxes, it's a bear breakout below wedge, best looking bear bar. It's also sell to close rather late in the day. And typically when you get, 5, 6, 7 bear bars in a row, you're going to get a reversal. So there's a lot of reasons why it should reverse. But anyways, when you get a sell-off of this magnitude, I hate to do this, but it's going to take me back. Let me do it like that. There we go. When you get a sell-off that's bigger, typically, if you go above it, it's just not going to go that far. It increases the chances of a trading range. Same thing for when you get a strong breakout on the open that reverses, typically leads to a trading range. So anyways, trading range price action, we're not getting this to the upside, so it looks like a leg in a trading range. And then we got and this happens frequently, if you look at, it kind of always fascinates me how we close on the high, but the whole move was created in 4 bars into the close. So anyways, on the next day, the only thing I care about, you can draw channels, whatever, but what I care about, and probably a better channel would be, I think some traders may draw it like this. I'm more interested in the simple fact that we gapped up. Here's the prior day's highs. I think we'll close the gap. This looks like a trading range gap up, so it's it's strong, it's always in long, but this is not above average price action. I think we'll get to the moving average. High 2 buy, but bear bar, probably sellers up here, and there's probably traders selling this close. Think about the logic. These bars will reverse. If I buy above this bar, put my stop below, there's probably a higher than an 80. There's probably an 80% chance, if not more, I'm going to get stopped out because my risk is small, my risk reward is huge. My risk is small, low probability. Great risk reward means low probability. Same thing here. If I'm selling, stop up there, it's just a bad trade, tight trading range. Traders doing the opposite. So, a lot of traders, instead of selling here, what will they do? Well, some may sell here and some will higher. I think most traders are going to say it's a bad sell. I'll sell where the bears get stopped out. So, okay, bears got stopped out. A lot of traders will just sell with limit orders, and boom. Same thing down here. Bulls are going to buy instead of weak bulls hypothetically would get stopped out below bars. Smart bulls are going to say, rather than buy above this bar, I'll buy at the low. So remember, a bad limit order, a bad stop entry is a great limit order entry. So if it's a bad stop entry buy, if it's a bad stop entry sell below this bull bar right here, it's probably a good limit order buy. And hypothetically, this is one of those situations where traders will buy more lower. Now, let's talk more context. This is, really all that is there's no context to that. So in other words, it's kind of like saying, okay, well, same thing here. Is this a bad buy? Is it a bad sell? Well, yeah. Now is it a bad sell? Technically not. 15-minute chart, bear bar closing on its low. And again, all the reasons I said, we're gonna get back to this close. It's the same thing over here on today. We're gonna test these closes more likely than not. We're gonna close the gap. It's a breakout above a trading range. We broke out above this range over here. We closed the gap. We're breaking out again. Probably gonna close the gap. So are we always in short? I'm not convinced. No real great stop entries either way. So we're neutral. I think we're slightly always in long, but this could be an endless pullback. It's a tight channel. What about buying here? Again, it's a tight channel. So I'd be concerned about buying this. Second entry short, do traders buy? And, it's a second entry short, but it's also a 4-bar tight trading range. So not a great buy. Outside down, trying to get a breakout below this tight channel, and really you can argue it's a bull flag. So bull breakout, pullback, bull flag. Trying to get a bear breakout, the bulls want a couple things. The bears want to measure move down. They want to test these lows. Let me do this. I don't like to see. If I'm going to do bar by bar, I really would prefer not to be able to kind of see any glimpse of the bar, just to be kind of completely honest. It's a bad stop entry. General, you can call it a wedge. 3 pushes, 1, 2, 3. Bear breakout below a wedge. It's very tight. It's not really a great wedge, which lowers the probability for the bulls. Big bar, barely, it's the minimum for follow through, so probably at least a small second leg down. There's the bear bar. Not looking good for the bulls. Okay. Now we have a bull bar. But the problem is, it's a micro channel. 2 decent big bear bars. May get a small second leg down. And again, endless pullback. The one thing you got to be thinking about is obvious gap. We're not closing the gap. And there you go. So this happens a lot. Bulls buy, they buy more lower, they try to close the gap, and then they fail. So, traders become very nervous. And I'm going to go ahead and just point out, you can see we touched the measured move projection. So from this high to this low. And we found buyers. But we also, why did we find buyers? Best looking bear bar of the whole sell-off. And it kind of looks like a leg in the trading range. We're still within this trading range. Let me back up though. I want to cover one thing with that. The problem with these moves is traders are always nervous. Let me do this. I'd like to show this on like a 15-minute chart at times, but I really don't want to. I want to show on a 15-minute chart, but I really don't want to change up the chart and have to deal with all that and going back to the time frame. So let me see if I can do it like this. Here's the 27th. Still have drawing stuff on it. There we go. So here we go. And that's kind of what we're seeing, on a 30-minute chart. Now here's where you're at. 3 consecutive bear bars. So an hour into the day, here's a 60-minute chart. Does that look like a decent sell? I mean, kind of. That's what this turns into. So if I go to 9:30, you're saying, wow, this is just not all that great of a sell-off. Well, what you've got to understand is this is what that looks like on a 60-minute chart. So although it doesn't look great on this chart, that's what you see on this chart. So always remember, big bars are made up of smaller bars. Even a 10-minute chart. It just, yeah, look at that. So 1, 2, 3, 4, 5 consecutive bear bars. And, you know, here was a little more clear. So one thing you kind of have to remember with that is, although a tight channel is a breakout on a higher time frame, and that channels are hard. They trip a lot of people up for that exact reason. They don't look as strong as they really are, and they can easily mislead people into thinking that they're not that strong. Okay, so back to where we were. Bear breakout, more down, and then boom. So minor reversal. This is probably more profit taking. I don't think bulls have to get out. You know, we are at a trend line, but I'm going to go ahead and get rid of that because I think the real target is this low. And this looks like a trading range. You know, breakout sideways for more than, you know, 81 bars at least. So I think trading range is going to fall below major higher lows over here. So always in, not really that clear. Maybe always in short over here. I wouldn't say it's always in short or always in long here, but always in short, probably this third bear bar, maybe on the close of this bar. Bulls, they can get out. I don't think they have to. This channel is rather tight. Stop up here, probably going to have to at least test lower. You can see traders sold the close, disappointed, and then, you know, they use this close to try to get out of break even. So you actually have a lot of bears trapped. So 74.5, if you sell that close, you're disappointed here. Price goes to 74.75, then it goes 74.25. So I'm actually mistaken. The bulls had one tick to get out. So look at this rally. It's not that strong. Looks like a leg in a trading range. Bull bar, bear bar, bull bars, bear bar, bull bar, bear bar. So it is a wedge. We're testing this top of the sell climax. Probably going to have sellers up there. Boom, big bear bar. So what does this tell traders? Well, a lot of traders are very confident that we're going to, the first pullback will fail and we'll retest this close. So they want to see how strong the retest is. First, they, you know, bulls will get out. Bulls will buy, trying to create a strong rally. Bears will get out and look to sell, and they'll wait to see how strong the sell-off is. That's questionably, it's fairly, you know, that could be strong. And traders are worried, is this a double top from this high to this high and a measure move down? So traders are wondering, will we get a measure move? Then we get another big bear bar, probably going lower. So again, at a minimum, I think we're going to this low. I really think we're going to go somewhere over here. Okay, bulls, will they buy this 3 consecutive bear bars? Probably not. You know, probably won't get a measuring gap though. Although the bulls are trying hard. Now we have a second entry. So what happened here? Bulls will buy. They'll allow the market to go against them once. They're not going to allow it to go against them twice after this. So big bear bars, strong bear breakout. Traders, let me get rid of this, it's kind of distracting. Traders are going to look, they want to sell a second entry. They're not going to sell the low one, they will sell the low two. Big bear bar. So starting to get consecutive sell climaxes, you know, here, 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 and here. But so far, possible another measuring gap. Probably will get to this low. Okay, we're at the target. Consecutive sell climaxes. I think we're also at my initial target, this low. I don't think we're going to go much further than that. And by the way, I talked on the open. If you remember over here, I mentioned how the stronger the initial move, the harder it is to create a strong trend after that or a strong breakout. Well, the same thing goes for this. If you pretend like this was the open, and let's say this was bar one, and we just rallied and sold off. Well, since this rally was so strong, the bulls are going to kind of say this. They're going to say, you know, yeah, whatever, it's a strong rally. I'll buy up here, and I'll buy more down here, and I'll look to get out somewhere over here. And typically that happens. Hence why that happened. And this is how trading ranges work. You know, a lot of traders, they will be so confident that we're going to fall below the lows that when it does, they'll see this and they'll say, you know, it's not that great, I'll just buy. And they'll buy and use a wide stop. And even if they bought here and used a wide stop, look what happened. We had to form a bottom, but we eventually rallied. But so let's dive in a little more with that for the day, because a lot of traders are not going to do that. That are just trading always in. So always in bears will get out here. Aggressive bulls will buy. Like that a little more. Bulls will buy. Aggressive bulls will buy. Bears get out. Probably testing up here at a minimum. Now the problem is consecutive breakouts. You don't know if this is a wedge 1, 2, 3, or is this the new start of the wedge 1, 2, and then we get a new leg down. I think 50-50 chance. So Al talks about it all the time. If you buy here, you can either buy a bigger position after you get the second. If you get stopped out, you buy again with a larger, twice, double your position. So trade a half size, and then when you get stopped out, trade a full size here. Or you can buy, use a wide stop. But a lot of traders would prefer to wait for a second entry after this. Okay, we have a second entry. Sorry, I get kind of tired doing all this talking and making these videos. So bulls will buy. Stop down here. It's a micro double bottom. Consecutive sell climaxes. Bulls get long. Bears still had no reason to get short again after this bar. And low too short, but it looks like we're developing a trading range. Bulls will definitely higher probability to buy here, and higher probability to buy once you see this breakout. But anyways, when you have consecutive sell climaxes, bulls are going to buy, and they're going to bet that we're going to at least make the market go sideways, and possibly here's the start of a trading range. Strong breakout, probably at least a little more up. You can argue wedge 1, 2, 3, or 1, 2, and 3, but very tight channel. First down will probably fail. Traders, do they get out here? They can, but it's tight trading range. We may pull back to this low. I'd probably get out below it. It looks like a leg in a trading range. And if this looks like a leg in a trading range going down, this looks like a leg in a trading range going up. I know this is gaps, but when you look to the left, it looks like consecutive sell climaxes, and I'm expecting that we're going to at least retrace up to here, maybe up to here. Here was my minimum. We've done that. So big down, big up, big confusion. I'd get out below that bar. And you can see 3 consecutive bear bars. We're testing this low. Coincidentally, we're also testing the low of this, but it's not that important anymore. This is more important. Big bar, big risk, testing the low. Bulls probably will buy. Tight enough channel, first down is probably a minor. So bulls will start buying down here. And you can see we have arguably a two-legged pullback, second leg trap. High 2 buy, but big bear bars, probably at least a second leg down. If you do buy, you need the wide stop, or that's why you need the wide stop. So second entry, and that's what happened. And this is actually an important point. So the market, traders think about this stuff. If you have think about the risk reward, okay? It's always in long. Stops down here. You buy for any reason. If I buy here and put my stop down here, my risk reward is, arguably, even to get to a new high, it's 3 times my risk. Does 3 times your risk sound like a high probability trade generally? No. If I put my stop here and buy here, I'll get barely 1 times my risk if it goes here. Okay. Worse risk reward, probably higher probability. So that happens a lot. Just kind of be aware of that we often go a little bit below a stop. That's why when you have these small bars after, especially big bear bars, best to use the wider stop. Now, so anyways, big bars, and same thing as I said, I don't remember where I said it. I said it over here. Bears will sell the close. They'll be disappointed, but they'll look to sell higher, and they'll look to see what happens back at the low close. Bulls will be so confident that that we'll have a second leg up. They'll buy and buy more lower. They'll buy, they'll scalp out, and then they'll buy again. And they want to see the retest of these highs. And look at the retest. It's strong. So probably going at least a little bit higher, maybe going for a measured move up. I think the real target is at a minimum now is these highs. It's possible we get back to over here, which was kind of the start of this leg in a trading range up here. But that's a far ways to go. So I don't know if we'll do that. But either way, strong enough breakout, probably at least second leg up. Boom, we had the second leg, mission accomplished. We're starting to get a wedge top. But again, I'm gonna get rid of this stuff for the moment. Whoops, there we go. Didn't mean to do that, but now you already know what happens. So, big second leg up. I said this is a target. I said a wedge top. So one thing you always have to be concerned with is, just as I said down here, leg and trade, big down, big up, big down, big up, trading range price action. Guess what? Well, that's the concern. So the higher you buy, this is, again, very tight channel, breakout, minor reversal, strong enough breakout that a pullback will probably be major. But what does major imply? It means a swing, 2 legs up. Now we have an even stronger trend line break. Now any pullback will probably lead to a major trend reversal. So what a trader, again, it's major trend reversals are constantly forming trading ranges, and most are not major. Traders are kind of fishing, if you will. They're buying, get to, second entry short, possible top of trading range, they get out. We have a pullback, second entry buy, bulls buy again, strong breakout, 2 legs up, bears sell, betting on the top of the trading range, bulls buy, they'll buy a pullback. Maybe we'll have to retest, these lows, who knows. Again, bears get in, bulls get out. Strong enough breakout, probably a small second leg down. Okay, kind of getting an endless pullback. So this will damage probably the rest of the day. I don't think we'll get above here. We could, but I think the bears need 2 legs down, and the first reversal up should fail. Okay, first reversal up failed. Now we have a 2-leg pullback. Very often, when you get a higher low major trend reversal, and it doesn't look that great, 10 bars up, but only a few bars down, and you often have to later retest the higher low, form a more convincing higher low. This is more convincing, but it's a bad signal bar. It's almost the end of the day, so probably not worth taking. And there you go. Hope this video was helpful. Let me know if you have any questions. Thanks.